All right, everybody. Thanks for joining us today. We are starting a new series. This is the perfect home selling process. We have had for a while now the perfect home buying process, and we are just starting a brand new series for folks that looking to sell their home. We're going to start with the first, in our view, the first thing to think about in the process of selling your home. Things to consider, things to avoid. What are some of your financing and investing options once you've sold? So we're going to bring Chase, our co-host, on today and chat about things on the financing side. How you doing today, Chase?
I'm doing good, Jerod. How are you?
Yeah, I'm good. I'm good. Another beautiful day and a fun topic, and I'm excited for a new series ourselves, and then we're going to bring on a team member from the MHC team as we move along. So it'll be fun.
Good, good. Looking forward to it.
Yeah, I know I threw this at you kind of last minute, but as with everything we talk about, the financing piece, meaning financing and investing, you're going to sell a house. You should know what your options are as far as financing your downstream home, or maybe financing a downstream home and investing some of the equity that you had. So we just want to kind of set the stage for the most important topic before we even start the process.
Yeah, yeah. That getting that all that worked out up front is really key. So I think it's a good way to go. Good conversation to be had.
Yeah, there's a lot of issues that can arise by doing a false start, right? You hurry
Yeah,
up, jump on the market, and you're like, whoa, wait a minute. I didn't have this in a row, and this planned out. So this will save you a lot of certainly headache, if not money as well.
yeah, yeah. Absolutely, absolutely.
So cool. Well, let's do a couple of housekeeping items here. For those of you that I haven't met, my name is Jerod Lee. I'm the associate broker and team lead at here at My Home Connection, also known as MHC Realty. And the sponsor, we have a new sponsor. This is the perfect home selling process that we've also been developing over the last couple of decades and just recently been fine tuning, refining. But really, this is just a refinement of a process of helping you sell your home. In collaboration with Chase, we're going to offer up to $1,000 for a meeting with us, having that no obligation consultation. Chase is offering up to $500 on the appraisal for the purchase of your next home, and we want to feel confident in the sale of your home by doing a pre-listing home inspection, and then of course just a myriad of other tools and skills that we want to bring to the table with the listing of your home. Professional photos and video, a podcast series that we're developing now, and just not only the things that you see on the screen, but a number of other things that we're going to bring to the table with helping you sell your home for top dollar in the most efficient way. So with that, I'll bring Chase on, but let's talk just a little bit more briefly about some of the pitfalls of not considering what you're going to do with finance on the next purchase or investing. Like, what have you seen that people went, whoa, I really wish I would have considered that? And I'm throwing you a last minute question here, but
No, man, there's a lot that can happen if you don't have your financing in order. Um, a lot of the times, people assume they're going to qualify pretty easily. And what I've seen a lot of recently with all the moving around the country is they don't factor in that, they're changing jobs or leaving a job and don't have employment figure out where they're going. They just know they have all this equity and they're making good money now, but that they don't put that forethought into, you know, um, what do I need to qualify, right? And you need typically an income or, some sort of avenue to continue that, or a letter from your employer saying that you can work remotely. There's a number of ways you can do it, but especially recently, this last, 6, 8, 12 months, I've seen a lot of folks that don't have that sorted out. I think we have a client going that direction now, right? And it becomes cumbersome in trying to figure out how you qualify, because if you know if you're wanting to sell your house and move, even if you're self-employed. I have another client that I'm working with now that's self-employed. how is that going to affect your business, your income from next year?
Mm-hmm.
And then, what are the requirements from Fannie Mae and Freddie Mac in order to get you qualified? And it makes it difficult. A couple of them I've gotten recently were already under contract, and well, you can't. I had to tell them you can't do it that way, right? You
Right.
can't. It either can't be a primary residence, or we have to find some kind of alternative income, calculation, and maybe do a non-qualified mortgage, non-QM loan, as opposed to just a normal conventional mortgage.
Which hopefully they have the ability to shift to a different type of loan, because some may and some might not. As you were mentioning some of these options, the one that popped into my head is kind of the most uh, common is, hey, I want to move, to another state, and maybe it's because you want to, or maybe you have to, but you pick a different industry,
Yeah.
right? So now that changes the dynamic of the loans, correct? I mean, not all
Yep.
lenders are going to say, hey, go from industry X to industry Y, and you're making the same, and it just works, right?
Yeah, or switching the way you get paid, even, right? Like, I've got someone that was W-2 and switched to 1099, making way more money, right? But that's self-employment. That's 2 years history. And there are some ways around that, but they're all more expensive, right? If there's no ratio loans now. There's bank statement loans. There's alternative methods of calculating income, but that always results in more down payment and a higher interest rate.
Yeah. Yeah. If you get ahead of this and you make different plans, one, it could work, and two, it could be far less expensive
Yes.
versus
Yeah.
this won't work at all, or hey, this is going to be really painful because it's
Yes.
expensive.
Hmm.
Yeah. Yeah. So change of industry, change of whether employed or self-employed.
Yep.
There's just a myriad of things to consider, right? I mean,
Yeah. Remote, whether you can remote work, whether you need the cash from your existing residence in order to purchase your next one, which might entail a bridge loan or a cash out refinance or a home equity line of credit. But then now you have to count that debt in your debt to income ratio plus the new house payment. There's a lot to consider, right? When you're talking about moving.
yeah, and I want to give you some credit and kudos here because we've worked together for a number of years now, and doing that structuring. I know your heart's in the right place, and you want to help them as best you can, unless they've backed themselves into a corner, to do it as efficiently and as cost effectively, or less costly as possible.
Right.
So the sooner you get involved, the more options you have that you can guide them. Hey, if you did this, this is how this would translate, and maybe that doesn't make sense because of other nuances. But at least they can put all the cards out on the table and say,
Yeah.
let's pick one, instead of the homeowner just starting to remove cards, and you're like, oh man, I wish I had that card because we could have played a much different hand.
Yeah. Yeah. That comes up all the time, right? It is much more difficult if you move forward first, because like you say, taking the cards away, right? Like, oh, you already quit your job. Dang, you know what I mean? Like, now we don't have income. Now I know that, and so it's like there's a process, and we need to follow the steps in that process in order to be able to put you in the best situation as a borrower.
Yeah, yeah, absolutely. So lots to consider there, but don't get overwhelmed. Just reach out and have the conversation. There's a reason we have no obligation consultation, as part of the perfect home selling process, because we don't want people to feel like, hey, if I reach out now, I've got people bothering me, and starting the ball rolling before I want to start it rolling. But what we know is the sooner you engage with us, the more options we have. And I don't want to offend anybody, but some people say, hey, I've bought and sold many homes, I've done this before. And I get that, but man, things change all the time. So even if you
Constant.
did it 2, 3, 4 years ago, most recently, that's a short move, a recent move, but that still means things on your end, on the financing sides, could have changed last week.
Yeah. Yeah, especially with the volatility you have in the economy, right? They're always making adjustments to try and solidify, you know, how lending is done and how they watch over it. And so it's something you want to, especially after '08, right? Like anything after that, definitely. But even, the last 3 or 4, like you said, the last 3 or 4 years, we've had a bunch of changes. And some of them are for the good, giving you more options, right? But let's figure that out first and not back ourselves into a corner to start the move out.
Yeah, they may be more, they may be less, but I can almost guarantee you they'll be different.
Different for sure.
Yeah, and you think, hey, I've got this figured out. I'm just going to do this and that, and then you're like, oh man, did you just do that?
But
Because that would have helped us a lot.
even Old Faithful in Idaho Housing and Finance, like they've had a crazy amount of change over the last 2 years. I've probably seen more changes in their programs than I've seen in my entire career. And so
Yeah,
it just options are changing like daily.
yeah, and like I like how you said some options are good, but if
Hmm.
you did something that precluded you from taking advantage of that option, you're like, oh man, that would have been a really cost-effective way to do this, or
Right.
really kind of seamless way to make that transition. And your job is to look at all of that as it relates to their objectives, their financial current situation. So you're not just looking at how are you going to finance the home, but what other tools do we have at our disposal to figure out, you know,
Yeah.
can you count that? Can you not count that? Yesterday I
Yes.
could, today I can't. Yesterday I couldn't, vice versa type of thing.
Yep.
So that,
Yeah.
what would you call that, Chase? I think I've heard you kind of refer to it as the holistic financial
Yeah.
view.
You have to look at it a little more holistically and understand. You want to look at what you're trying to achieve as a home buyer too, right? Is this going to be a short term stay for you? You're just moving to the area or something, say for job for just a couple years or in the military, right? Like we're going to want to approach it differently depending on what your long term plans are, because we want to put you in the best financial situation, and that goes along with the plan that you already have in place. We want to build on that, not take away from it, or and all those factors matter, right? Like what do we, if you're not staying, do you want your cash all tied up in there? That's why VA loans you see a lot. You can get away with nothing down, right? 100% financing,
Mhm.
and that's great if you're changing, like if you're moving every 3 or 4 years, right? But you're not really building a ton of equity, and you just approach things differently depending on what your plans are.
Yeah, yeah. Well, I like the idea that you're not just looking to help them get a home loan. I hesitate to call it financial planning because obviously there's certain
Yeah, I'm not.
licenses and, things like that. But the more holistic side of things, like, hey, maybe you should talk to a financial planner because you're going to have a sizable, a bit of equity here that you might want liquid, or
Mhm.
whatever. At least point them in the direction instead of them just. Uh, like some lenders will just say, "Oh, here's your home loan, off you go, off to the races." I don't want to overcomplicate things because it slows me down type of mindset. Your approach is, I don't care if it slows me down. If it's in the best interest, if it's in your best interest, then I'm going to go down. Then I'm going to go down that
Yeah,
path.
and you know me well, and you know that I have all those folks on our team, right? Like I don't know if I've told this story on here or not before, but one of my first clients, after I moved to Summit, young family, and I'm sitting with them at my desk, and they're across the desk from me, and it's the wife and the husband, and then they're early to mid 20s at best,
Okay.
and they've got their kid and 2-year-old sitting on the mother's lap, and it just hit me like a ton of bricks because I got them qualified, and they were so excited to have their new house, and we were meeting and talking about it and getting moved in and stuff. And it dawned on me that she doesn't work. All the income is coming from him. And if something happens to him, how are they going to keep that house?
Mm-hmm.
And so from that moment on, I changed the way that I approach my job. I actually went through and did, life insurance classes so I could, and I never got licensed. It wasn't about an avenue to make money. It was in order to help people understand how to keep what they're getting, right? Like, I don't want them to just get in a house. I want them to keep it,
Yeah.
and I want them to help to start to build wealth through that real estate.
Yeah. Love it. Love it. Yeah, and that's the perspective that we, preach and certainly use here is, if I'm going to buy and sell a house, how am I going to do it? If our children are going to do it, if our friends are going to do it, we're going to treat that transaction,
Yep.
just as if we are extremely, intimate with that transaction. One, it's the right thing to do, and then obviously we're extremely honored by repeat and referral business. And
Yeah.
you help people at that level instead of just, a transaction. We're not transactional lenders or agents where it's like, hey, here you go, off to the races. Hope I did a good job and didn't have too many hiccups. Like, no, we want to, continue to establish a friendship and a relationship and help them not only buy a home, but build wealth,
Yes. Yeah.
to see, them in the chapter, not only open the chapter of their life at that point, but to watch them through the chapter, Anyway,
Yeah.
kind of going off tangent
Yeah.
a little bit.
No,
But
yeah, we've had these conversations since day one, since we met, right? Like, it's I think why we've been able to work together for so long, because we're so like-minded in that aspect. And these, no matter what anybody says, these jobs are way too hard, and there's way too much stress involved in buying and selling real estate for it to be just transactional. You
yeah,
know what I mean? Like, for me, I have to have that piece of my process in helping these folks, because otherwise it's just, frankly, it just wouldn't be worth it to do the job, right?
right, yeah. You and I work off of what I don't know that I coined it, but I've used it for a long time. I don't know if I made it up or heard it somewhere, but it's been a long time, so I don't recall. But emotional currency. You know,
Yeah.
this is, we thrive on helping folks, and I don't mean to get too mushy here, but just trying to share, if you're going to work with folks, look for the mindset of that long-term relationship, because, they're going to help you through the process much differently than if it's just a transaction, right?
Yes.
They're
Yeah.
not going to ask some questions, or they're going to overlook some things or whatever, just because their perception is the quicker I get it done, and the quicker I can move on to the next transaction, that, oh, I did a
Yeah.
really good job for those folks because there wasn't many, if any, issues, and it got done really fast.
Right.
Well, no, if you'd spent a little more time and asked some more questions, what could you have really done for them? Oh, yep, it's going to take you longer to do. It's going to take some time. Or I got to pull in the financial planner. Oh, I got to pull in the CPA. Or I got to pull, whatever that looks
Yep.
like. But that's the right thing to do.
Oh, 100%.
So
Yeah.
anyway,
It is the right thing to do. I don't know. It's a big responsibility what we do for people, I think, and it's not taken that way by a lot of folks, but it's a big. I see it as a big responsibility, and we're blessed in this era that so many people have so much equity in their homes, and we're not dealing with a rampant rate of foreclosure or short sales, but like, I think we've talked about this. I think our school systems, I think everybody, um, they're lacking that basic financial training that they need. And so I think taking that on and doing our clients a service to make sure that they're in the best position moving forward, that they get to keep their home, that they get to build equity, they get to build wealth, and, be able to step up into their next investment. I think that's what keeps me going anyway, right?
yeah. Yeah, I think a recent example, and I won't spend too much time on this because I know we're getting kind of mushy here, but just to give you an example, Chase has been talking on podcasts and has helped people talk about assumable loans, right? We've got some folks that are moving out of, sub 3% interest rates, sub 4% interest rates. And, if they assume a loan, Chase isn't helping them get a loan. So, but
Right.
it's the right thing to do, right? If we're in a world now of 6 and 7s pretty easily, and now they're finding an assumable at 3, 2.5, 3, 3.5, 4. That's the best thing for them. And we're going to go pursue properties that have potentially assumable loans. By the way, the listing agent might not know that, which is a little sad. But anyway, just one more example. So I would say, we talked about a lot of things to consider. Things to avoid, I guess, is just simple and straightforward. Avoid just jumping into it.
Yes. Plan.
Plan. Yeah.
Yep. That's as basic as it can get, and by doing that, you're avoiding most of the pitfalls that you could run into by just planning.
Yeah. Yeah, I guess planning gets rid of a lot of the things to avoid, right? You didn't make any rash judgments in employment. You didn't shift,
Mhm.
from employed to self-employed type thing. So that avoids a lot of them because they're getting guidance from you.
The the Zillows and the Redfin and the internet and all that stuff, and I'm not putting them down, but they have turned home buying into more of an impulse shopping scenario. Which anytime you're spending this kind of money, it should not be an impulse, right? Like it should be planned out. It's not the little candy rack sitting next to the register at the grocery store, right? It's a
Yeah.
it's
Last
a
minute
big
checkout.
responsibility.
Impulse buy. Did you get your gum with that?
Yeah, right. So just
Yeah.
treat it as such, right? That's it. That's
Yeah.
all. That's all we're saying.
I think that's a really good point, Chase. Things to avoid would be, hey, I've got access to all this information, so therefore I must know enough to make these decisions. And I don't want to offend anybody, but some of the stuff that's put up there um, it's just misleading.
Yes.
People are like, oh, I can afford that house. Look at my payment. So I've spent a bunch of time looking at it, and then they go into the back end and realize, oh, they're automatically putting in 20% down. First time home
Yeah.
buyer putting 20% down.
Hmm.
We see that, but not a lot. But if you're reading on the Zillows and the Redfins or wherever that you can afford this house because here's the payment, you know, but
Yeah.
do you have
Assume an
20%?
800 credit score, 20% down. Perfect scenario, right?
Right. Yeah, they're giving the perfect scenario. And by the way, they omitted MI, mortgage insurance, which
Right.
if you're anything less than that, than the 20%, 19%, you've
Yeah.
got that, which then jacks up your rate. And obviously you're financing more, so that gets higher. You know,
Correct.
did they know if they had a homeowner's exemption on the property or not?
Hmm.
Because they're just calculating whatever's in public information, and you're like, oh, I didn't
Yeah.
realize that didn't have it. Anyway, whatever the information is. So I think what I'm saying is the things to avoid is assuming there's enough internet information for you to make a good decision. And I'm only saying that because it doesn't factor in your personal situation and objectives, and it just
Yeah.
misses a lot.
Oh, it just misses a lot, especially like to your point, like in a state in Idaho, we're a non-disclosure state. And so, yeah, the information that they have access to is much more limited. Um, and yeah, you're not taking into account so many different factors. You're just looking at a number and a monthly payment. I think I can afford that, and that's probably not what your payment's going to be. And so, do that planning and be ready. And the other thing is I think in this world with the online stuff, and as with AI blowing up the way it is, it's gonna take over a lot of our jobs.
Yeah.
I do believe it's something we're gonna have to fight. It doesn't. I don't think that means that our jobs are obsolete because of a lot of the stuff we're talking about, right? Like I think like when it comes to agents, I did a oh man, I did a video a little while back, and I can't remember the exact number, but something like 70. I think it was like 71% of all real estate litigations are because one side or the other did not have an agent involved.
Bad idea.
Like there's so much that goes into that. I bought houses before. I can do this on my own. I don't need an agent. Do you know what your agent did for you? Like, you know what I mean? Like, it's an important job. And the NAR settlement, all it did was reinforce how important it is.
Yeah. Yeah.
Everybody's caught up on the money aspect of it, but there's so much legally. There is so much liability there. You definitely need to take the time and be with the right agent for sure.
Our this is a quick side note, but our broker, a designated broker, I'm an associate broker, but anyway, he did kind of a satire back and forth and a real quick reel or whatever. I don't remember which social media platform it was on, but it was kind of that. Oh yeah, I'll just work with you because I don't need an agent, and the agent's like, oh yeah, you don't need it anyway. It was just kind of a comical, but real. It kind of hit
Yeah.
home like That's what's going on in this situation.
Yeah.
Anyway, I just thought it was a very creative way for him in just a couple, minute or two to collapse
Yeah.
the potential, liability frustration that you're going to have in that type of arrangement. Anyway, tangent
Yeah.
again, rabbit or squirrel, whatever.
An important one, right? That's another one of the things that'll lead to mistakes and difficult transactions is not having an agent involved.
Yeah,
Got
yeah.
to have that.
Well, yeah. Agent representing the seller, agent representing the buyer.
Yes.
I tell my folks all the time, even if I have the listing, if somebody comes to me and says, "Hey, will you represent me in the buy?" It's like, I'm going to refer you out because I need to
Yeah.
represent the seller. I'm, obligated to represent the seller, and I'm not going to remove that because that's what that would be doing, right? If you
Yeah.
say I'm doing dual representation, you're saying I'm no longer negotiate to the best of my ability for the seller. Anyway, I think we're getting off on some other topics, but avoid that,
Yes.
right? As a listing, and don't
Agreed.
let a listing agent represent both sides because you need to know that at that point that agent is shuffling paperwork.
Yep.
They can't, and they're supposed to tell you, I can't properly, fully negotiate this transaction for you, representing both you, the seller, and you. My hands are, anyway, sorry, I
Yeah.
talk with my hands and you can't see my hands. But anyway, can't represent both you at the same time. So I would say, avoid that. Not that it's impossible. Sometimes it just is straightforward and there's not a whole lot to negotiate. The price is the price, the terms are the terms. And if you can make it efficient and save a few dollars, but that's a rare occasion. And in most states, it's illegal.
And you don't know. And I guess that's my problem with it is you don't know. You don't know if it's that situation if you don't have anybody fighting for you. Because they were the listing agents. They were the listing agent before you came with an offer,
Yeah.
right?
Yeah.
So they were already representing the seller.
Yeah.
And so, yeah, you'll just never know. There are 100% honest people out there. There are sellers that, aren't going to drop their price. This is going to be what it's going to be, right? Like you said, but you'll just never know
Yeah.
if
Yeah.
you don't have someone representing you.
Yeah. Another thing to avoid that popped into my mind was thinking that your property's ready. Because on the lending side, I'll let you speak to. Well, let me preface the question, then I'll let you speak to it. But or the statement. If you assume your property's ready, as a listing agent, I want the buyer pool to be as large as I can for you,
Yeah,
right? And if I don't accurately list it with the types of qualified loans for that home, is it going to be VA eligible? Is it going to be FHA eligible? Is it going to be, obviously conventional most likely, but whatever it is, to make an assumption that that home is ready to go. And or if you don't have a listing agent helping you identify, here, if you did these minor things, it would open up that pool and I could flag that as
yeah,
FHA
yep, yeah.
qualified.
Or like you brought up before, is it assumable? Do you have an assumable loan? Like yeah, all of those things. Yeah, there's a lot of preparation, and obviously that goes to guidelines for the different loans. Condition for FHA, VA, USDA, all the Govy loans are different. What's acceptable there is more stringent than like a conventional loan.
Yeah.
And so knowing who your buyer pool is by talking to your agent, right, your listing agent, and understanding where you're going to be and who's more than likely going to be offering on your house, and this is what we need to do to make sure that they're qualified for those loans is super important.
Yeah, we can work together on that. I mean, obviously, in large part, my job as a listing agent is to know those things, but things
Yep.
can change, right? I get not the qualifications, but what the appraisers are looking for and what the
Yeah.
conditions are that you see and don't see. You and I have to work fairly close with that because if you're in an area that's heavy VA buyers, and I've got a sidewalk that has a crack in it, and it's been pushed up a couple
Yeah.
inches, you know.
Had that one get us, haven't we?
Yeah.
Been a few years. I remember that one.
Okay. Yeah. I was going to test your memory a little bit. Yeah, just things like that. Like to assume, oh, I don't want to spend the money on that.
Yeah.
Well, okay, maybe not. But if that's the only issue that's going to preclude you from having FHA, or it's almost guaranteed that that's going to become a condition at at
Appraisal.
appraisal,
Hmm.
just one, get some numbers about what it's going to cost to do that. And if you've got that and 10 other ones, maybe you won't flag it as VA qualified.
Right.
Anyway, but you just want to work with folks that are going to look at your property and accurately position it on the market, because the last thing you want to do is figure out it is or isn't, mid listing and certainly not mid transaction.
Right. Yeah. You can be prepared for it, and it's not necessarily you got to fix it right then, but be prepared that it might come up, right? And knowing what your solution is going to be if it does come up.
Yeah. Yeah. Ahead of the time, instead of, oh, I didn't realize it was going to cost me 3 grand. It's like, well, maybe you should, or, whatever the number is.
Right.
Then I probably wouldn't have taken it off the market for that type of buyer. Now potentially they're terminating because they have this issue, can't get financed. Buyer gets their earnest money back, and now you're putting it back on market and realizing you got a stigma associated with the days on market, the fact that it was off the market, come back. Anyway, it just, kind of that whole false start idea again. That's another
Yeah.
thing you want to avoid.
Right. Right.
So
Absolutely.
anyway,
And people don't understand that, right? They don't understand the whole MLS listing, oh, we took it off the market, now we got to put it back on. How the price drops affect them, like all of that stuff. That's where you come into play. Another reason you need to have a qualified realtor.
yeah.
Just saying.
Just saying, yeah, yeah. So let's talk about the financing options. And I know obviously we've already kind of said it's specific to your situation, and you've
Yeah.
already kind of alluded to what some of the options are, bridge loans and things like that. But if you're just talking about somebody that you don't quite know all of the information yet, like what would you say from your portfolio as a broker that you have to bear to help them? Do you know what I mean? Like you're going to have a
Yeah.
lot of different types of solutions. You mentioned QM, non QM,
Yeah.
AIO.
So, yeah, with what I do, I mean, technically I'm a mortgage lender. Summit, the company I work for, is a mortgage lender. And, but we also broker. And I'm blessed with the owner of our company wanting us to be able to have all the tools that we need in order to support our clients in the best way possible. He went out and bought a non-QM lender and brought him in house, and so now a lot of those options are much cheaper for me.
Can you elaborate a little bit on non QM? I know a lot of people
Yeah,
get
so
fuzzy.
so qualified mortgage is anything that's basically regulated and insured by HUD, right? Fannie Mae, Freddie Mac. Um, Non-QM. When you think of non-QM, like some of the older folks get a little scared because they think of the back, stated days pre 2008 when it was the Wild West, and if you had a name and told somebody you made $300,000 a year, they took your word for it
Yeah, but these are
without
not
looking at
those.
the documentation, right?
Yeah.
And so non-QM is basically your offshoot loans that don't fit into that area where Fannie and Freddie would insure them,
That
right?
pretty little box that
Right.
some might fit in and some
Which
might not.
which you would be astounded at how many people do not fit into that box, right?
Right.
Like it just, um, but you're, self-employed borrowers oftentimes, and it's the same issue. They're trying to avoid paying a high rate of taxes, and that's their accountant's job. Fannie Mae and Freddie Mac have written the guidelines and the income calculations so that you have to it's, and I look at it, this is my personal belief because I come from self-employed parents, and those are my friends and my family, and so I'm always thinking the government's out to screw them, right? Um, I feel like they have written the income guidelines in order to force you to pay taxes to qualify to purchase a home.
Hmm.
That's just my belief, right? There's no other reason that they should be so stringent on those folks. But that when you get into that situation, right, you might have to look at a bank statement loan. You might have to look at a no ratio loan. You might, if it's an investment property, a DSCR loan. There's other ways to calculate income, through asset depletion if you have money in retirement accounts or things like that. or if you have a trust and there's, we can show some trust income. All of those different things go with different loans, right? So if you're looking to buy and sell, most of the time if you've purchased a home after 2008 and you're self-employed, you understand that it's more difficult for you now, right? And so you're coming to, like, most of the folks I see like that come and say, okay, what do you need? Because last time this was really hard, right?
Yeah.
But if you're buying and selling, like, I have bridge loans are very prevalent these days. If I got a client in Washington right now selling, buying here, their home in Washington was almost paid off, and basically with the bridge loan we cross collateralized the equity in that home and bought their new home in cash. And so they didn't have to move out. They could live there until the home sells, or they buy their new one. And then once that home sells, you pay off the bridge loan and refinance into a permanent loan. And that's just one way a bridge works. There's a couple different ways.
Yeah. I guess what I wanted to bring to light, and it's a pitch, but it's the truth here, is when you're talking about financing options, Summit's blessed with being able to buy a non-QM company, so you have that in-house product. But if you either didn't have it in-house or didn't broker it out, well, guess what that lender's not talking about?
Yeah.
So now you're back to those box options.
Yeah.
So the point is, you want to work with somebody that's got your best interests in mind, not just short term, but midterm and long term, and then has a portfolio of different loans that they can, look around and say, hey, if we did this and then we did this.
Yeah, and you know me. If there's a better option out there that I'm aware of for a certain specific situation or client, I'm that guy that says, hey, I think you should go do this.
Yeah, absolutely.
Hey, honest to a fault, if that can be. I don't even know. And so I don't have a problem doing that, but you're right. Like, you have to know what your options are. Like, and if you can lay them out and say, dude, these are your options, and this is going to save you this much money over this many years, right? Then you have data to go off of, and you can make an informed decision on how you want to proceed, as opposed to, well, these are the options because we have two. These are the options that you have to look at.
Yeah.
And traditionally, brick and mortar banks are that. They do some things very, very good, but most of the time, because mortgage lending is not the only way they make money. In fact, it's one of the lowest on the totem pole.
Right. Yeah, that's like a two-person department. I'm kidding, but
right. But like they have a board to answer to. Sometimes they have great deals. Other times, if you're just a little out of the norm, not a standard W-2 borrower, they can be very difficult to work with. And then timelines, right? They close on the weekends. They
not available in the evenings.
Yeah, not as available. There's a lot of things that go into that. And like I said, not to say that,
right?
Because when they're running their deals, and I know there's a lot of times I'll send a borrower to there. Hey, this is going to work out way better for you, right? But just knowing the differences between what we all can get accomplished is huge.
Yeah. Well, I think what we're talking about is heart, experience, and options, right? Is your heart in the right place to put them in the right direction? Do you have the experience to kind of put this stuff together? And if you have a breadth of options, whether it's, somebody like yourself that's honest enough to say, hey, even if it's not my business, meaning is it going to be a loan I'm going to be able to fulfill? But they go elsewhere, then, that's what they need to do.
And unfortunately, I sent one last week, like a new program I'm getting set up within our company. They ran into a glitch with IT, and it was going to be touch and go whether I would get it to, get all that worked out before contract date. And so I said, hey, I called.
Can't jeopardize it.
No, I couldn't risk it. So I called a friend and said, hey, man, I need you to take care of this for me. So.
Yeah. Well, I know we're going a little long, but I think this is all really great stuff. And, if you've got time,
Chase, you got to be kidding. That never happens.
We never do that. I think we did get one under 30 finally. More than a year into it, we finally. Anyway.
2 years
But I do want to talk briefly about bridge loans, because I know, people might be aware of them, might not be aware of them, but they've certainly, changed over time and the benefit of doing them and the costs associated to that. But I guess right now I want to bring it to light because again, our market's heating up back to previous episodes. And, are you going to put an offer in with the contingent home sale? What are you seeing on the bridge loan side of things? The benefits of that.
You're definitely can put a little more pressure on the cash buyers, which we have a lot of in this valley. And in a number of the places that I land, not just Idaho, cash buyers are, if they're selling from certain states, they've got a bunch of cash. And so you're shortening that with the bridge loan. You're shortening that timeline. If you do everything up front, a lot of times you can close in a week and a half, 2 weeks, something like that. So it makes those cash offers look less attractive, allows you to compete. I will say the preparation is huge with that, like we've been talking about, because depending on which bridge loan you qualify for, there are costs, right? There are 2 closings, but sometimes like when we're in a market that we are, but there's also the convenience, right, of not having to have your house sold, so you don't miss out on the house that you love. Not having to move and try to time everything so that you can get out and in at the same time, right?
Sometimes the cost just makes a lot of sense. Like
100%, 100%, especially if it allows you to go now as opposed to wait. If it takes 6 months to sell your house, which that's not realistic in our market, but if they're coming from a different market, if it takes 6 months, how much more is the house here going to cost you in 6 months?
Right.
You know what I mean? So there are costs associated with both sides, but just understanding, and then your income. Like if like the first bridge that I just described not too long ago, they can, I broker that product and they don't count if you're going to list your home, they don't count the vacating property against your debt to income and that payment, right? One of the bridge loans that I have in-house, you have to qualify for both payments, which can be a little more difficult. And so understanding, well, this one we wouldn't qualify for. This one's a little more expensive, but it still puts us in the home here, which potentially saves us, $20,000 or $30,000 over purchasing in 4 months. It's just understanding the situations and where the market's going and what it's doing.
Yeah, absolutely. Okay, so I don't want to cut that one too short, but I just want to expose everybody to the idea to talk to Chase and get that figured out as per what you're trying to accomplish. But I do want to move on to investing options and we already kind of alluded to it, right? You're looking at it from not only a lending side of things. You're not a financial planner per se, but building wealth ideas should be taken into consideration. Like, hey, does it make sense to take all that equity, put it into your new home? Like, what can you talk about as far as high level potential considerations of reinvesting it to make it a better financial decision than just stuffing it into another loan?
So I'm a big proponent of, and it sounds like I'm trying to drive myself business, right? But I'm a big proponent of not having your primaries paid off for a number of reasons. I think that cash should go towards building retirement first because your primary is appreciating anyway, right? You're going to make the payment, it's going to appreciate, and so that's going to add to your retirement portfolio on its own, as long as you make that payment. If you put big chunks down or pay that off, what could that money have made you, right? Like if you look at the S&P, I think it's probably around, I don't know, between 7 and 8% over the past, 25 years. That's a pretty good return on a decent chunk of money. If all you did was just invest in that. But then there's other things to consider as well, as far as life insurance and things like that. I try to work really closely with not just the financial planners that I know already, but if you have one, I like hand in hand. Let me know what you're doing, what your financial planners, what his plan is for you, and which buckets he's putting those monies into. I've got a loan that I have on my property that's a first lien HELOC that has allowed me to not only buy investment properties and to take cash in and out of that loan, but it's allowed me to, build, whole life policies and other avenues to generate, interest and give access to cash for investments.
Well, I think that's a really good example, right? Because in my experience, that's not an option that many, if any, people are aware of, right? If I put a whole bunch of money in and put it down on my now new home, that's not liquid. You might be able to go get it with the HELOC. You might not, depending on how much equity you have and what their guidelines are, and does it make sense with the costs and all that. But you're talking about, a home line that's set up front that
Hmm.
is extremely liquid, and you can evaluate, does it make sense to keep it
Yeah.
down, in that loan, to keep the principal calculation with the interest, down, or do you take some of those monies and put it
Right.
elsewhere?
Yeah. Yeah. If you're good enough at, if you're good enough at managing that yourself, it can be a great situation. There's times when I haven't taken any money out because of where rates were. But then there's times when I put it into a 12-month bond, or I bought another investment property. It allows you to make those moves and make that situation. The thing about real estate is everybody wants to call it an asset, but it technically doesn't become an asset until you sell it or you access the equity in it, right? Otherwise, it's just a liability. And so if you have a liability that's appreciating and it's gaining value over time on its own, the all the money that you put into it, right? There's more times than not, there's better uses for that.
Yeah. Yeah, and I know we're getting into some more sophisticated stuff here, and there's some lines that you got to hand over to the financial planners and all that. But we want to illuminate the fact that these are considerations that should be at least glanced at to make sure,
Yeah.
like, hey, have you thought about this? Would this make a difference? Not necessarily sending you in those directions, but definitely making you aware of them, so that a year, 5, 10 years down the road, you go, oh, I wish I'd have known that. I'd have done something different.
Right.
That's awful, right? Because you don't get that time back.
No, you don't.
So, anyway, yeah, we're coming up on the better part of an hour here. So, but we've covered a lot of ground, and this has been, I think, an amazing topic. And I hope folks that are looking to sell their properties realize the magnitude or the importance of having the initial conversation to lay the
Yeah.
groundwork to move into things smoothly, instead of false starting, or tripping over issues, things like that. So,
Yeah, exactly.
but so again, folks, this is number one of a series. Subscribe if you want to get into the other series, or certainly check in, comment if you got questions or what have you, or just reach out to either one of us at any time. Take advantage of that no obligation consultation, which then gets you access to the sponsorship with the appraisal costs, inspection costs that will contribute to at closing. So just open the dialogue. We're here to help. Is the short
Yep.
end of it. So cool. All right, Chase. Thanks again. We appreciate you coming on and all your valuable insight.
Anytime. Enjoy it.
It's
Have a
awesome.
great day, Jerod.
You too. Thanks, everybody. We'll wish you a blessed one. Take care.